Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about why the overall stock market is down and pulling back right now, if we could be going into a recession or a crash, why I am dollar cost averaging into VOO and SPY ETFs, why I think the WEAT stock, which is an ETF for wheat, is going to absolutely explode higher, and lastly we're going to talk about why Costco stock is absolutely exploding right now based upon really good financial results recently. So for more stock market update news videos that can make you money, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about the overall stock market, and without further ado, let's jump right into today's video. So we're going to do a very high level overview of all of these stories because I don't have enough time to go into every one of these developments. But right now, we're going to look at the recent performance of the S&P 500, which has been very fantastic. All of the indexes over the last year or year and a half have actually done very, very well, which means that we are anticipating a very large pullback or some sort of correction. Now, other investors think that this could develop into somewhat of a recession or even a stock market crash. However, even if those type of bearish investors are correct, the best thing to do would probably be to dollar cost average into these stocks because we all know historically the stock market has always recovered. So it's no surprise that the stock market is cooling off right now and the overvaluation is being tapered off in the overall market due to the FUD and various macroeconomic factors that we're going to talk about, which is why I personally am investing in dollar cost averaging very heavily into ticker symbol SPY, which is an S&P 500 ETF, as well as VOO. Now, I personally like VOO more than SPY. However, this particular author uses SPY. So we're going to talk about what he thinks of the current market environment. So right now, stocks are crashing if you haven't looked at the indices right now, and it's mainly due to very tech-heavy stocks such as Amazon, Google, Tesla, and a lot of other NASDAQ stocks or NASDAQ 100 stocks found on QQQ or NDX. And these tech companies are pulling back very hard because they have had fantastic growth opportunities and they are very overvalued right now, so a pullback was bound to happen eventually. Now, pullbacks are just part of the overall market, so if you are a newer investor and you haven't been in a bear market right now, or you haven't been in a bear market yet, this is 100% normal. It's just a cycle that the stock market goes to, and it's actually very healthy for the overall stock market. Now, one of the reasons this is happening, we have investors that are pulling their money out of tech stocks, which is making a QQQ pull back right now because they are taking their money out of growth stocks and putting it into value stocks or dividend stocks, while other investors are taking their money completely out of the stock market and they're investing into bonds because right now is a time for major market volatility due to macroeconomic factors in our economy as well as the world economy due to the amount of sanctions being put on Russia right now. So that is a reason why the S&P 500 as well as the other indices are pulling back right now, and it's why I personally am dollar cost averaging into these indices because I know that the stock market is going to eventually rebound, so it's going to give me long-term gains. So picture right now is buying stocks at a fantastic discount and just continue to dollar cost average even more so while all the stocks and indexes are pulling back. If we actually look at the stock chart, we can see that SPY has downtrended very aggressively in the last month. However, over the last year or even 5 years, we can see a phenomenal, very positive trend. Just in the last year, it's almost 14% up, and in the last 5 years, we can see a very large portion of the overall gains despite macroeconomic factors. So it's no wonder why the ETF and index wants to cool off as of late, and I think this could fall very handsomely. We could even see it fall to around this level. But during this time of a pullback, it's most likely going to pull back as it has multiple times before on the overall stock chart. However, every time it has pulled back, we can always see a fantastic rebound or recovery that has come after that. So even if this does go down, we can anticipate another fantastic recovery or rebound, which is why dollar cost averaging into the overall S&P 500 is extremely safe and it's a fantastic way to build wealth. Now I want to talk about the WEAT ETF, which is a wheat ETF that I think will explode higher, mainly for 3 reasons, and we're going to follow the logic of the Seeking Alpha article author. So he says the first reason for this is higher inflation rates. Inflation has reached one of the highest levels that it has ever been at, including the last 4 decades, which means that rising prices are going to be a staple in the overall economy. So this is going to cause wheat prices to rise because other commodities and other resources are also going to increase in price. Reason 2 is that Russia and Ukraine are one of the world's largest producers and manufacturers and distributors of wheat, and because they are currently in conflict right now, that is going to drive the overall supply down, which is going to increase price and therefore increase the value of the WEAT WEAT ETF. Reason 3 for the WEAT ETF absolutely skyrocketing and exploding here recently, just to crash back down later, is going to be consumers are going to panic. Once the prices of wheat products such as bread, pasta, cereals, and a plethora of other things, consumers are likely going to buy them up, and this is just going to further decrease the overall supply, which will also increase demand. So if we have lower supply and higher demand, the price, according to our macroeconomics education, says that the price is going to absolutely explode. Lastly, we can also look at the current trend of wheat based upon the overall population of the entire world right now and how it's a staple in the diet of people across the planet. So these things are going to cause the WEAT ETF to absolutely explode, and I'll get more into that later. So let me go into detail of these 4 reasons. So wheat clearly is a staple for global nutrition, and the supply of wheat has to meet the ever-increasing demand for it. So not only is the world becoming more populated, because the world population is around 7.88 billion people right now, that number is constantly increasing, which means more mouths to feed, which means that the supply of wheat also needs to increase, and if it doesn't, we're going to have more demand than we have supply, which is going to cause the price of wheat products to increase very rapidly. Another reason why this is going to happen is because Russia and Ukraine literally make up 1/3 of the world's wheat exports. So imagine all of a sudden we lose 1/3 of this particular source. Clearly there's not going to be enough to go around for everyone anymore, and this is going to make the product very scarce. And once this happens, consumers are going to start buying up this product very rapidly. Now the problem with wheat is, specifically breads, is that these products can go bad. So a lot of this is actually going to become waste. However, there are other wheat products that aren't going to go bad very quickly that have very long shelf lives. So with this bottleneck that's going to happen because of the war between Russia and Ukraine, we can see the WEAT ETF absolutely explode in price, and we can use this to make profits because we are investors, so we want to invest into the ETF just to trade off of it. So according to the article, Russia and Ukraine account for around 32.83% of the world's wheat exports, and that statistic came in 2018, and now they probably have even increased that overall number. Now, if we scroll down here, what does the chart say? So clearly, from a technical analysis standpoint, the trend of wheat is absolutely fantastic. Just look at this. Very positive slope, and that is set to continue all the way until we reach kind of an apex over here, and then after this is reached, or after there is an actual conclusion to the war between Russia and Ukraine, we can anticipate this to fall back down to regular prices for the commodity itself, as well as the overall WEAT ETF, which I'm going to use to trade off of to make a lot of money. To give you some context of this ETF and this wheat ETF, basically it provides investors unleveraged direct exposure to wheat without the need for a futures account. And this means that investors can very successfully use this to trade off of. So let's go over and look at the wheat ETF. So just from the chart right here, and again, we can see that it was relatively flat until recently, and then the price absolutely started to explode. So let's look at it within the last year. So again, we can see that it is absolutely exploding. The ETF price was around $7.44, and now it's trading for around almost $11. And this is supposed to continue to increase. Now, what's funny is that this has actually had a very downward spiral. However, you can see recently we have seen a great increase, and this is going to head up even more. So again, you want to get in and you want to get out. I am just telling you what's going to happen, and it's up to you to do your own research to see if you are comfortable doing this. You also want to make sure that you get in and get out with profit, so don't be too greedy. As soon as you make 10 to 20% gains, remember to take profits. Don't be too greedy. Otherwise, you could invest too late and then it could crash back down before you know it. So I just want to make you all aware of that it's a fantastic trading opportunity. Lastly, I want to talk about Costco, because Costco stock has been absolutely phenomenal lately, and the ticker symbol for Costco is COST. Many consumers have been flooding into Costco lately, buying up very high margin items such as jewelry as well as furniture. The reason for this is there has been strong demand for high margin items such as jewelry and furniture, temperature. So basically, people are flooding the store right now, buying up as much as they can, especially high margin items, in anticipation that these items will most likely increase due to inflation or other factors. Now, why specifically the stock price is absolutely exploding lately is that they had a very impressive earnings report. Their total revenues rose by around 16% to around $51.9 billion in the second quarter compared to a year earlier, and analysts actually expected only an increase of $51.47 billion. So this revenues beat was very exciting for investors to see. Also, they also had good net income, which rose to around $1.3 billion, which translate to an EPS of around $2.92 per share. And this actually beat analysts' expectations because they thought the EPS was going to come in at $2.74. So a fantastic revenues beat as well as a fantastic earnings per share beat for Costco. And I personally own Costco stock, and I think it's a fantastic company. So over here, you can see on a GAAP EPS basis the revenues and the revenue growths, which is basically a 16% revenue growth year over year. I also want to highlight how their membership fee income grew by almost 10% year over year, and they are still expanding in 2022 by adding over 28 locations. So although this stock and this company is already very large, they are continuously expanding, which is fantastic to see. Now, despite this, the overall stock price is pretty high right now, and that's why we are seeing insider selling. So within the last 12 months, we have seen a lot of insider selling, especially within the last 3 months. Around $11.4 million of Costco stock has been sold from insiders, while only around $500,000 have been bought by insiders. And that's just within the last 3 months. So this does tell us that the Costco stock, or the COST stock, is trading rather high right now. But honestly, it has been doing absolutely phenomenal. Currently, the Costco stock price trades for around $524.20, and that is continuously changing. However, the low-end 12-month analyst price target for the COST stock is only $284. So for this bullish prediction, technically the stock could fall very drastically. However, the average stock price target among analysts for the next 12 months actually comes in at $557. And that's overall good news for investors, while the most bullish price prediction for the stock comes in around $650 per share. So it's not surprising to see a slight pullback from Costco stock and then a slight surge due to this fantastic earnings report, but overall, they have had fantastic stock price appreciation over the last 5 years, gaining investors around 216% overall. The main takeaways are to dollar cost average into the S&P 500 and other indexes right now while the stock prices are falling, so you can make fantastic returns on the rebound. I'm giving you a heads up that the WEAT ETF could continue to surge, and then you can trade off of that to make fantastic short-term profits, but be careful because eventually it will come back down and crash again. Then lastly, I'm highlighting that Costco is a fantastic stock to own. Although the stock price is trading rather high right now, overall it has done investors very well over the last 5 years. So remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below, and I will see you in the next YT video.